Assalamualaikum to my lecturer and fellow friend. Today, I would like to tell about the impact of digital technology on integrity and ethics in preparing and reporting financial information for the international company. Before I move forward, I want to introduce myself. My name is Muhammad Hilmi bin Zaini, BB17110082. The first issue is blockchain. Blockchain is a system of recording information in a way that makes it difficult or impossible to change, hack, or cheat the system. A blockchain is a digital ledger of transaction that is duplicated and distributed across the entire network of computer systems on the blockchain. Each block in the chain contains a number of transactions, and every time a new transaction occurs on the blockchain, a record of the transaction is added to every participant ledger. For accountants, using blockchain provides clarity over ownership of assets and existence of obligation and could dramatically improve efficiency. Blockchain has the potential to enhance the accounting profession by reducing the cost of maintaining and reconciling ledger and providing absolute certainty over the ownership and history of assets. Blockchains could help accountants gain clarity over the available resources and obligation of their organization. Blockchain is a replacement for bookkeeping and reconciliation work. Next, application of blockchain technology. An audit involves an assessment that record transactions are supported by evidence that is relevant, reliable, objective, accurate, and verifiable. The acceptance of a transaction into a reliable blockchain may constitute sufficient appropriate audit evidence for certain financial statement transactions. An asset record on the blockchain has transferred from a seller to a buyer. The example of blockchain issue. In a Bitcoin transaction of a product, the transfer of Bitcoin is recorded on the blockchain. However, the auditor may or may not be able to determine the product that was delivered by solely evaluating information of the Bitcoin blockchain. So, the impact of blockchain into Bitcoin recording transaction may not provide sufficient appropriate audit evidence related to the nature of the transaction. In other words, a transaction record in a blockchain may still be fraudulent, unauthorized, illegal, executed between related parties, linked to a side agreement that is off-chain, and incorrectly classified in the financial statement. The second issue is Internet of Things. Internet of Things is the network of devices such as vehicle and home appliances that contain electronic, software, sensor, actuator, and connectivity which allow these things to connect, interact, and exchange data. IoT involves extending internet connectivity beyond devices such as smartphone to any range of physical devices and everyday objects. Next, IoT in accounting profession. IoT is support and built on the factors that have made accounting successful in managing from a distance. Accounting enables the conversion of disparate data sources into a common monetary language. Working hours become cost, products sold become revenue, and so on. Control for completeness and accuracy, including the inbuilt control of the double entry system, are mature and well understood. Therefore, manager can confidently use various kinds of information to look for pattern, ratio, variance, and trend to help them to make decisions. Linking IoT information to financial information increase our ability to make this causal connection. The impact IoT in China. The most basic accounting benefit arising from the IoT is automate transaction processing, which bring with it improved data quality and reduce costs. Building on the long-established benefit of barcode for recording sales and inventory, RFID tech improve the level of accuracy and degree of automation. One company that we choose was selling RFID tag for a car seat belt, so client could register sales on a timely basis and prevent manipulation. Previously, sales had been recorded on paper form or over the phone. Combination of various technologies used in China to automate the processing and approval of employee expenses.